Welcome back to Wall Street Week. We are speaking with oil titan Boone Pickens today.
And also joining us is legendary trader Mark Fisher, founder and CEO of MBF Clearing Corporation. Welcome, Mark. Boone is looking for
Hi, Anthony, how are you?
I'm doing great. Boone is looking for $50 a barrel by the end of the year, or 2016. What's your outlook, Mark?
Well, the last time I made a major prediction, I was dead wrong when I said oil wouldn't go below 80. But I would say that oil's in a band between 30 and 60. And I think that if, for an investor, anywhere between, 35 and 55, like Boone said, most of these companies are going to, the strong ones are going to survive and do quite well.
So how do you make money on this situation? Do you want to be buying the commodity straight out? Do you want to be buying some of the companies that are doing production? Boone is expecting a huge wave of consolidation and deals. Is that one way to play it?
Well, let me first say I'm honored to be on the show with Boone because he may not know this, but him and I were on opposite sides of the largest crude oil open outcry trade that ever took place. It was like, I think, a 7,000 lot trade that went down in one shot right after the Iraq War, where Boone had made a fortune being short, and there was an arbitrage to be done between the first and second month, and I was on the other side of the trade.
That was
so
you? You remember
Pickens.
that?
No, but listen, I know who Mark is, so yes, I didn't know we were on the other side of that trade.
No, we both made money, so it was good for both of us. But to me, I'm more interested in the opportunities in natural gas than I am in crude oil for a couple of reasons. Number one, when you have someone as powerful as the prince out of Saudi Arabia, who can move the market $5 either way with 5 words out of his mouth, that's not necessarily a market that you really want to go ahead and put a lot of eggs in your basket in, because right now, as you saw what happened, the prince, a 30-year-old prince out of Saudi Arabia, basically scuttled the entire deal that had been worked on for over 2 months, in 5 minutes. But to me, there's a lot more catalyst going on in natural gas going forward than there are actually in crude oil. And obviously, a lot of these companies that Boone mentioned will thrive if natural gas actually picks up. Number one, I don't think we're going to see a repeat of the weather that happened this past winter. Number two, I think with the LNG finally getting on track in the United States, with increased exports to Mexico, with increased demand, more conversion from coal to nat gas, and if you get a typical winter and maybe even a cold winter and a hot summer, I mean, you could see the price of front-month natural gas go up by 50, 60%. To me, that's some place where there's a lot more catalysts, and you can't have 1 or 2 people just influence the price in 5 minutes by, 10%.
Mark, from a trader perspective, you're long at this point?
Yes, I'd definitely be a buyer of dips in natural gas. And in crude oil, if I was looking to do something, I'd be looking to trade, it's a little esoteric, I'd be looking to trade the front-month spreads in both heating oil and gasoline, and even in crude, because I'm sure Boone knows, I mean, even with the market right now being at $43 in WTI, the front-month spread in Brent just went into a backwardated state for the first time in God knows how long.
Boone, do you agree with that? Do you agree? Natural gas?
I agree with everything Mark said. I'm long natural gas, too. So, long oil and long natural gas. But he's right. You can get a lot more leverage off the gas than you can off the oil.
But you're long fundamentally through the end of 2016, though. Is that correct? I mean, you sort of think this is going up from here.
I'm not long nearby contracts. I'm long
longer-dated contracts.
Yeah, right.
What do you think about that, Mark? Does that make sense?
Well, it does, but the problem is, Boone knows that when you're long-dated contracts, when you expect the price to be $50, $55 towards the end of the year, the market's in a contango state. So basically, the market's priced in, even though the spot month is trading 43, the market, in December, I don't know, Boone, is it 48, 40? I don't really know where that is right now. So again, Boone's 100% right. To me, I'm all about where's the biggest ROI, return on my investment in the energy space. And to me right now, with the leverage and the price of natural gas getting decimated over the last year and a half, I think there's more leverage and less risk buying dips in natural gas than there is in trying to go ahead and make the extra $4 or $5 that there could be in crude.
We've been talking a lot.
I think it's more than 4 or 5.
More. How much?
That's the only place that Mark and I haven't agreed on everything he said. I think there's more there.
And part of this is we've been talking about Saudi Arabia, And number one, we had that production freeze summit. Nothing came out of it. The Saudis would not do anything because the Iranians wouldn't partake. And then you hear Saudi Arabia saying we may consider taking Aramco public in an IPO, the Saudi oil company. Would you buy that deal?
No, no.
Why?
I wouldn't buy it with stolen money. That's what I think.
Why?
Well, do you think you're going to have stockholders' rights?
No.
None.
I don't.
Zero.
You're right.
Okay, how you like that?
But what about a dividend?
I'd rather buy Pioneer.
So what are your top 3 names, Boone?
Mine?
Yeah, your top 3.
Oh, Pioneer, Enron, Anadarko. They're all good.
And if you had to pick a big oil, which one do you think is the best of the big oil?
Oh, I'd probably pick Chevron.
Chevron.
But big oil. I don't know what they're going to do. I don't know what their future is. They now have they're in decline on production. So they've either got to acquire to add reserves. They're probably not going to find it. And they've missed the shale play. Chevron didn't. Chevron's big in West Texas.
Yeah.
You saw a downgrade in the credit on Exxon. Do you think any of the big oil companies would cut their dividend near term?
Yeah, it'll be horrible if they do. I'd rather cut CapEx than I would. But Exxon is consistently buying their own stock. I would stop that and increase dividend.
But what about this? Is this a dividend play then, Mark? Do you agree with that?
You know, honestly, when it comes to, you know, which individual energy stocks to pick, I would leave that to Boone. But I do think that cutting CapEx is probably a good idea, and returning more value to shareholders via, you know, buybacks and dividends is better. Because why keep investing in CapEx if the price is, you know, so low?
Boone,
it
Mark,
doesn't make too much sense.
Boone, Mark, stick around. More after this.